Good afternoon, Maverick traders. It's August 29th. It must be a Monday because Joe's with you here. Let's get into the market roundup. I've got my opinion and I've got a couple of trades to look at. Take responsibility for it if you want to follow along. Jumping into the market analysis, it's a little bit of a follow through from a pretty aggressive sell-off on Friday. Let's get right to the topics here. The daily news, the Fed remains hawkish on interest rate policy. The markets moved lower, substantially lower. We had a little bit of a spike in the VIX. It was, I think we're at 26 is where it hit, so it's not too big of a deal. But the Fed is diligent. They went up to Jackson Hole to have a good time, and they realized that we need to stay ahead of this. The markets didn't like it. The markets have had a pretty decent recovery since June, but the Fed believes that there is more to come. What does that mean? Well, let's take a look at it. The Dow, the S&P, and the NASDAQ, a little bit lower today, a little bit of a follow-through, kind of a gap down. We really didn't go anywhere. I'll get to the charts here in a second. Down the S&P, about a 0.5%. NASDAQ, about a full percent. The minis, just shy of that. Oil jumping on the defensive side there, so it had to move about 4.12% today. Just kind of continuing on what it did on Friday, and gold pretty much flat. So let's jump straight into some of these charts. Now, I made a pretty good comment. I wasn't sure if it was on Wednesday's class, where I know a lot of coaching. This 410 level is key in continuing this uptrend. Now, key for the current uptrend doesn't mean that, hey, it's the end of the be-all world, but we are definitely above the 50-day moving average on not only this, but all three of the major indexes. So what do we do here? We'll take a look at the volume that was attached to yesterday's, or I should say Friday's move. It was big. A little bit of gap down, a little bit of, okay, we'll fall through with a sell-off. Now what do we do? Well, you got to bounce, right? You got to bounce at this point if you want to stay sideways or slightly bullish. If not, we might have another round of selling. The Q's, pretty much the exact same situation. We parked conveniently on that 50-day moving average. If you guys have pulled up the weekly charts, I'm not going to do it here, but go ahead and do it because they have absolutely confirmed a good bear rally and look like we are going to keep that down channel on the longer term. However, in the shorter term, we are parked at that 50-day moving average. Everything participated. Nothing outside of energy, which is the defensive play. Looks like Walmart did pretty decent up there as well. But a general sell-off or continuation of what we saw on Friday. Now, guys, I can't take too much out of Mondays. I'm not very good at them. However, I'm just going to keep myself at a +1. This is definitely dialed down from a +2 because we did pivot right at that 20-day moving average here on the SPY. You guys see that? And we are moving lower. So we do have a lower high, but we are still in that slight uptrend if we could stay above this 50-day moving average. So I went ahead and said, okay, we are above the 20. Let me go ahead and just erase that bad boy, right? You know, we're still above that 50, using it as support. And the slope is still there, even though this might be a little bit rolling up. I'm going to continue this as kind of a flat slope, upslope. I don't like this descending here, but I do like the overall move to the upside. So I have to be 0 on the weekly because I'm not sure if we can hold this level that we're at around the 400. But I have to dial it back from +2 on the monthly down to +1. Still bullish, just not buying anything right now, right? Let's take a look at some potential trades. This came from last week. This came from Sunday. GIS, General Mills, NOV looked pretty good. Capital One Financial looking a little bit bearish, but I have to kind of acknowledge what Darren and Rob said about this being in a channel because it's still in it, and then a bunch of bear side trades. A lot of stuff breaking down. Take a look at what they are. We got Newmont Mining. We've seen that before. J&J, ABBV. So we got some issues in that sector. AT&T, Match, all sorts of them. So I got a couple to look at. I'm not going to look at all of them, but if you guys want to go through, please feel free. Let's start with our bulls. I like GIS here because it bounced. Nothing else did. Everything else kind of gapped down and went sideways. This bounced. It loves that 76 level. It looks like it wants to stay on top of it. So I'm just going to go with it moving forward. Sideways to up, sure. Yeah, 76 is support. Wait for it to gather some strength and hit 78. If you think the markets will bounce, this might be a good one to see if it's going to put its head up against 78 and break higher. Something like a diagonal. NOV, energy, oil and gas. This is just in the right sector. It's having a bounce because So is the whole sector. I like it up against that 19 level. I think a high base here might be pretty cool, or an ascending triangle, whatever you guys want to call it, breaking out towards the 20 mark. You don't have to get too aggressive with this. You could do something more sideways if you want to do some sort of a butterfly, 18, 19, 20. That's fine. I'm not sure what it has as far as strike prices or expiration cycles, but I do like the chart itself. Let's move on to the sideways. This is the channel that Darren and Rob were actually discussing on Sunday's class. I like it here at the 115. I think he said 115, 105. Maybe I'm wrong, but that's the channel I like. It's on its way down. Of course it is. Look at that, $2.39%. So it might find some support there at 105. If it can, we've got ourselves a nice, maybe potentialed condor, or something that could be bouncing off that lower range and moving higher. If you guys want to play the Bollinger Bands, let's buy it off the bottom, sell it at the top, so on and so forth. If you guys want to do a week at a time, I'm okay with that as well. So, still holding in there, but looking a little bit more bearish. Johnson & Johnson confirmed to the downside. Friday was a beautiful confirmation of this for you guys that have been following along with the Wednesday's class and the updates over the last week or so. This was a great confirmation on Friday. It feels like you're chasing it here, but you could still play this potentially with some sort of a credit below that 164. If you want to go a little bit more reserved about the 165, you could see it kind of the lows of Thursday and Wednesday works for me as well. AT&T, this was on my sideways radar for a while, but I love the fact that it set that 18.5 pivot a couple of weeks ago, and it's breaking 18, and it's just bleeding off. So I don't think this thing's going to hit 17 or 16 anytime soon, but between where it's at, 18 and 17.5, something sideways to down might be something to play diagonal or just credit-wise. ABBV, also in lines with Johnson & Johnson. This one did break beautifully, confirmed on Friday. We talked about this with the shorter-term target around 135. It looks like it touched it today. So I don't want to get too aggressive to the bear side, even though these markets are starting to show some weakness. I can't get too aggressively, or I should say targeted bearishly right now because of it's just Monday. And we hesitated right on that 50-day moving average, so keep that in mind as you guys look forward, especially from a bearish. Just be cautious. Didn't mean we missed the bearish move. Just don't try to bite off too big of a chunk before these markets consolidate a little bit, retest, or fall over once again, and then we can jump into it. So real quick, pretty easy one, right? It's a Monday, so Monday is just kind of a follow through from Friday. We expected the move lower. We got it. We didn't expect much move. It didn't happen. We expected it to be glass half empty. Of course it was. Like you saw, the index is 1% down on the NASDAQ. The others are about 0.5%. So just kind of parked ourselves on the 50-day moving average on the dailies. So the markets react to the Fed stance on inflation. Didn't like it. A little bit more optimistic when it comes to the markets versus what's expected in the economy. Now I put this down here, over optimism. Is this, or is it this the disconnect between the markets and economic impact? No one's lost their jobs yet. No one has stopped affording their bills. These things come later, unfortunately, and I hate to be doom and gloom, but this is how it works. Until it's felt, we won't see it. So the markets are, once again, saying, what are you guys talking about? Because we're good. So how do we measure this? Keep an eye on the economics. Signs of slowing, but there's nothing super impactful on the consumer just yet. Look for jobs, layoffs. As soon as that happens, unemployment increases. Unemployment claims increase. It's going to be slow, but it will happen. Once that spills over, that's what the Fed's trying to get ahead of. So let's watch for that. Now, knock on wood, folks. Let's hope that doesn't happen. But it sounds like the Fed's expecting it to. Earnings reports. We're out of earnings season. Just check your potential trades. Make sure there's nothing that's in the news or it's got some sort of news event. Past that, it's kind of what it is. All right, guys, not much to go on. Just a carry over from Friday into Monday. Gap down. We knew we would. We hit a certain support level, and we just kind of parked here. You and I are pretty much in the same boat. Just wondering where the next move goes, and really don't have too much to go off. But there are some potential trades out there once the markets decide to take a direction. All right, folks. Thanks for joining me. We'll talk to you next time.